Hi, this is Andy Hoffman of CryptoGoldCentral.com, where I publish a daily crypto-focused blog and provide professional crypto consulting services to individuals and altcoin developers alike. Now, my financial markets career started in 1989, but I didn't have a penny to invest until 1999, just in time for the top of the dot-com bubble. With the crypto market under severe pressure, although as I write, Bitcoin appears to have again held support at the Hoffman line, I thought you'd be interested to learn how my personal investments have panned out over the years, generally speaking, of course, which I might add were 100% aligned with my constantly changing career path, which in each case I changed principally due to my changing investment expectations. After I'm done, I'll conclude with a short discussion of where we stand today, given that I've done a million tweets already about it, and what I expect going forward. Back in 1999, I received my first significant paycheck. In my first year as a sell-side oil field service analyst at South Coast Capital in New Orleans. Dot-coms were the rage, and naturally that's where I invested, along with telecom stocks recommended by South Coast telecom analyst who was a good friend of mine. Percentage-wise, I did phenomenally, just like everyone else, but dollar-wise, it wasn't enough to make a big dent. However, when the dot-com started to turn down, I exited immediately in April 2000, to be exact, from which I spent the next 3 years largely in cash. This was a major killing relative to others who lost a lot of money as the bear market continued into March of 2003. In fact, I briefly shorted tech stocks in mid-2011, including Amazon.com, somewhere around $10, with mixed results, which brings me to my first encounter with market manipulation in the days following 9/11. Yes, I was heavily short tech stocks that day. The two I recall were Intel and Network Appliance, or NTAP, and had my biggest one-day gain ever when stocks reopened a week later, only to have those gains erased within days by a fledgling President's Working Group on Financial Markets, i.e. the PPT. I ended up in the black, but learned a significant lesson about shorting stocks in markets the government decides to support. Too bad I didn't consider the opposite in the coming years, i.e. owning markets the government considers unfavorable. As it turns out, I lost just 2% in 2002 compared to 25% for the S&P 500, making a highly successful first 4 years of my investing career. Then came May 2003, when just as the stock market was bottoming, I was informed about precious metals by my assigned broker at Solomon Smith Barney, where I had been working as a sell-side oil service analyst since 1999. My first purchase was a few hundred shares of Newmont Mining, and within a month, I was all in precious metal mining stocks, many of them amongst the smallest, most speculative exploration companies. The gold and silver prices at the time were $350 an ounce and $475 an ounce, respectively, which I didn't have to look up, as I'll never forget. At the time, I simply thought the dollar index, at roughly 100 at the time, was overvalued relative to other currencies, and thus that it would translate to higher gold and silver prices over time. Indeed, it fell as low as 72 in 2008 and didn't exit the 70s for good until 2014. However, over that time, far bigger dynamics were in play, starting with the machinations of an increasingly powerful gold cartel to the catastrophic long-term ramifications in terms of debt, inflation, money printing, and monetization efforts of central banks. Between 2003 and 2007, the gold cartel was unquestionably present, which I realized quickly to the point that by 2004, I was a regular contributor to GATA, i.e. the Gold Antitrust Action Committee, which to this day reports daily on gold market manipulation. However, it was far less active than today and had limited interest in the share market. Thus, between 2003 and early 2007, I made a killing, on a par with Bitcoin 2016 to 17. The problem being that the junior mining shares I made most of my money with abruptly peaked in April 2007 for no particular reason. To wit, the Vancouver Stock Exchange, where most were listed, since renamed the TSX Venture Exchange, was roughly 3,500 at the time, compared to 680 today, which in hindsight was ludicrous given that gold and silver were still just $650 and $13 an ounce, respectively, at the time. This major event in my investing career coincided nearly exactly with moving to Colorado, as well as my first job in precious metal investor relations. Yes, I started working in PM investor relations for junior mining stocks the month junior mining stocks peaked, i.e. April 2007. With the exception of 2004, when I generated a modest loss of 10% relative to a 10% gain for the S&P 500, I had handily outperformed the market in 7 of the first 8 years of my investment career. But then 2007 struck. Ironically, gold and silver had good years, up 25% and 10% respectively. However, mining stocks did not, which frankly, I cannot remember a defining catalyst to explain. Thus, I lost 40% of my portfolio, my first major down year. This leading up to the 2008 crisis. In hindsight, I wish I was in physical metal when it hit, as despite the cartel smashing the paper prices when the big one hit, aided by their brand new SLV and GLD ETFs, physical prices soared throughout the crisis, yielding major worldwide product shortages. However, holding predominantly mining shares, I was hit as hard as anyone during 2008, losing 60% of my portfolio. Frankly, it was one fortuitous trade that saved me when I went all in a small silver royalty firm called Silverstone Resources, which was subsequently bought in March 2009, as I had hoped, by industry Goliath Silver Wheaton, for SLW shares valued around $5 at the time. When silver and mining shares rebounded sharply in subsequent years, Silver Wheaton went to, I think, about 25 or 30. I restored a good chunk of my portfolio, but never came close to recouping it. Moreover, the fortuitous timing of my move to Colorado in May 2007, just as mining shares were peaking, helped me too, as to buy my house, I sold a chunk of mining shares that I otherwise would have held through the ensuing carnage. Next up, a major turning point in my investment career, as well as my personal and professional life, i.e. the run-up to $1,900 gold and $50 silver in 2011, in what in hindsight, for whatever reason you choose to attribute the subsequent price weakness, was the bursting of a bubble that caused me untold misery for years to come. Yes, late 2010, when the IPO of the Sprott Physical Silver Trust, PHYS, took significant supply out of the market, revealing just how thin it was, and in turn, yielding a parabolic surge to $50 an ounce in April 2011. In turn, prompting the gold cartel on an ultra-thin night when the Chinese market was closed for a holiday to launch the Sunday Night Paper Silver Massacre, replete with unsubstantiated stories of how bin Laden had been killed, as if 10 years after 9/11, this should somehow be considered a precious metal negative event. As it turns out, all of the losses were recovered by midday Monday, when a second wave of paper selling enabled the operative to succeed. My portfolio, then now roughly 30% bullion, along with 70% mining shares, was savaged again. And thus, even when with gold surging to an all-time high of $1,920 in September of 2011, believe it or not, it was just $1,500 when silver hit $50 in April, and with it, silver again to $45, I ended the year down 13%. The reason being that when gold hit $1,920, the cartel initiated a series of vicious raids to suppress it. The first on Labor Day weekend, coinciding with, to the hour, I kid you not, the most gold bullish event in memory, i.e. the Swiss National Bank pegging the franc to the dying euro. In fact, the second such attack in December yielded the infamous headline on the German equivalent of Bloomberg, i.e. market sources report the BIS, BOE, and Federal Reserve were selling gold after it popped to session high. MNI News via Bloomberg. MNI owns the German stock exchange, this headline was subsequently taken down, though, after the price was bombed with not a single comment or explanation. Yes, I joined Miles Franklin in October 2011, 1 month after the price peaked, and watched the cartel destroy what was left of the precious metal market for the ensuing 6 years. In June 2011, when I was still working in mining investor relations, I sold my last mining stocks and went entirely into physical, which in hindsight, though a losing trade per se, was one of the best I ever made. As despite significant declines in bullion prices over that period, they were dwarfed by the horrifying performance of mining shares, which I vehemently recommended people to avoid. In modern parlance, the way the mining stocks did compare to gold and silver over that period were the difference between Bitcoin and third-tier altcoins. So the ensuing 4 years, i.e. 2012 to 2015, were not the hell on earth it could have been had I remained in mining shares, but instead an investment purgatory where I was at best flat while stock, bonds, and other government-favored investments were taken to record highs by the lethal combination of ZERP, NERP, QE, and market manipulation. That said, if you throw in the misery of being a high-profile precious metal commentator those 6 years in a business struggling to stay alive, it was indeed dark times. Just as I joined Miles Franklin in 2011, as it turns out, Bitcoin had started trading and did so relatively quietly until the Mt. Gox bubble and burst of 2013 to 14. It didn't have a big impact on precious metals yet, but by the time I left in 2017, it was unquestionably contributing to the accelerating decline of bullion sales. Fortunately, thanks to my role at the forefront of sound money, I have been well aware of it, to the point that I actually owned one Bitcoin at Mt. Gox. And the week it collapsed was at a conference debating Trace Mayer, of all people, on the virtues of Bitcoin versus gold. After Mt. Gox, I watched Bitcoin daily for 2 years, trying to figure if my initial instincts about it were right. And finally, in January 2016, at roughly $425, I felt the time to re-enter had arrived. Well documented in Miles Franklin's still public archive of my daily articles, I became increasingly bullish on Bitcoin for the following 18 months, building an increasingly large position, also well documented throughout this time. However, what really changed my views and ultimately the course of my life was Bitcoin's victory in the scaling debate in July 2017. As directly after SegWit locked in, I started selling my silver to buy more Bitcoin, in the process becoming more vocal than ever, which not surprisingly led to my parting ways with Miles Franklin a month later and starting CGC. By early 2018, my gold too had been exchanged for Bitcoin, supplemented as well by the crypto dividends Bitcoin holders have enjoyed along the way. Not to mention B-Rhodium, which when it starts trading shortly will, in my view, be the most valuable crypto dividend of all. Consequently, 2016 was a very good year for me, and 2017 the best of my career. 2018 has been decidedly less successful, but at $6,000 Bitcoin, I have little to complain about. And unless the crypto market completely collapses from here, which given Bitcoin's fundamentals, I put very small odds on, I'll be quite happy with my financial standing, even if the price remains flat for some time to come, which is highly doubtful, particularly given my enthusiasm for B-Rhodium, which as airdropped at a rate of 10 BTR per BTC, atop bonus allocations for early registries, was a very significant crypto dividend. As for how right I've been about Bitcoin, which detractors tend to ignore when prices decline, particularly newbies who have no clue of my history, I'll put my track record up there with anyone. Sure, if I traded the tops and bottoms correctly, which I guess no more than 1% of crypto investors have, I'd have had better results. Then again, the same can be said for every investment I and you have ever made. And in the case of Bitcoin, let alone altcoins, trading is for all intents and purposes financial suicide. Ask anyone who's tried it, particularly those following the so-called top gurus in the space. To the contrary, I've simply advised people to hodl Bitcoin since $425 and be as proactive as possible about crypto dividends. Also, to avoid trading like the plague and altcoin investing, which this week's carnage clearly testifies to. Heck, no one has been as vigilant and vocal in attacking the Ponzi scheme known as Bcash, which, how about that, was revealed this weekend to be just that. And as for the Hoffman line, i.e. the $100 billion market cap level for Bitcoin, I not only predicted it would foster a massive surge of Wall Street capital when breached to the upside, before Brian Kelly famously predicted a wall of institutional capitals headed for crypto, but since falling back to that level in February, have equally vocally discussed my view that major institutional support would occur at this level, which thus far has been defended 6 times, including last night when the low was registered at $101 billion. Not that it can't turn around and collapse at any time, as after all, this is the anything goes world of crypto. However, as I tweeted earlier this week, we have been through the Mt. Gox trustee, Bitmain dumping, SEC ETF approval delay, and a massive gut-wrenching crypto bear market all year. And yet, Bitcoin has still maintained the $100 billion market cap every single day. As for what I see going forward, my guess is as good as yours in the short term. However, given that not a scintilla of bad news has occurred in Bitcoin since the height of the scaling debate, at a time when fiat currencies are serially crashing, precious metals dying, altcoin competition dead, a record Bitcoin hash rate, and institutional support so powerful it has prevented the price from falling below $100 billion, I am as bullish about Bitcoin's price as ever before, which I might add will likely start discounting the 2020 halving less than a year from now. Either way, I intend to continuing hodling for the foreseeable future, which to date has been the most right investment decision I've ever made. Thanks and have a great crypto day.